All right, traders, the sell-off continues. So let's go take a quick look here. I'm pulling in my S&P 500 daily. As we noted previously, we were looking for this market to potentially continue this rollover, and it is doing just that. All right, so we were watching right here on the daily S&P 500 for a potential left shoulder, neckline, head, neckline, and then possible right shoulder sell. That short entry would have come in around 99 to 2001, right in that area. Instead, yesterday we got back to previous swing highs, rolled all the way back over, and now we're making new lows as we go. All right, so again, let's pull our volatility gone crazy. So real quick, let's take a look at vol. And again, I'll pull in the data box right here. Average true range right over here, 8.8, was at 21 points a day. As the market rallies right here, I want you to note the decline in volatility. We go from 21 points a day down to 10, a 50% decline in volatility. Then as we make it to the highs, we pull back and volatility goes from 10, starts to increase, and recently we've seen a couple of 140, 150% ATR moves. Right now we're up at about 19 points. Now this daily bar will shift. Let me just reload historical real quickly. Yeah, I'll do it. All right, so we've rolled back over. Now current S&P is trading back down around 58 half, 57s. We're going to open near yesterday's close. So on the way up, market's in a trend. Volatility declines. ATR was declining. Okay, now you see down here, let me go to data series, turn off my markers. Down here, we closed near the absolute lows, and more importantly, we popped a little bit. So we talked yesterday near the close of the session that I expected the market to roll back over and then blow to new lows. We have made new lows in the Globex session. We did roll back over, go back down and test those previous lows. So the more important part is yesterday's daily close lower than the last. Here was the last higher close on 820. So it took everything that we've put up since the last rally. Now let's just take a quick look right here, gang. Take our swing high at the head, pull it down to this low, outside return lower high here, and then let's project. Here's our 1-to-1 symmetry right there. So this is where AB would equal CD. I want to drop that in right at that high. So there's a projection right there. All right, number two, I want to go grab my Fibonacci analysis, left click the fib extensions. I'm going to go swing high to that low, and then again I'm using my fib extension tool. You can see that 1945 is the projection. So that's an AB, BC, AB equals CD move right here, or 1-to-1 symmetry. Number two, I've got a 1618 extension of the head down to the right shoulder. And then number three, just below that, about 7 points, is my 618 Fibonacci retracement. So 1945. Now, let's take a look. Average true range at the close yesterday was 19 points. 19 times 20% is 3.8. So we're going to take 19, we're going to add 4, we get 23. We take the current highs of the day and ask a simple question. If the current Globex high is the high of today, 1967 quarter minus what we just came through on our numbers, 23, then what's our projected low? 67 minus the 23, 44. I've got a 1945 1618 extension. I've got an ABCD. 3 different technical studies projecting 44 to 45 today. If the lows of the current session, 1956, wind up being the lows of the day, we add 23 to that. 1956 plus 23, 1978, 79, which would be a rally back up here. Okay, so again, if the sell-off continues, good extended targets, 1945, S&P 500. If the lows of the day are in, then 1979 on our projection. So I'm going to get rid of this. We've broken the neckline. Our head and shoulders did not come to fruition. We've got our ABCD in right there. Again, volatility increases at the tops. We went above a symmetrical double top. We were watching a potential pattern trade for the head and shoulder sell. All right, now let's go take a look at some other markets. Let's go TF. Russell's down almost 6% for the quarter. The other four indexes up for the quarter, down for the month. Let's move this guy out of the way. Okay, so we dropped right into our 1100 handle as expected. We got our pop. So from our swing lows right here, let me pull this back over. You see that yesterday's low print, 1102 ticks. So our 1100 level held. Those of you that bought the 1100s, you got a pop right here. Our highest high has been the 1110 level I called out yesterday. Now again, we looked at that on our 1000 tick charts. And we were using our rule of projection as well as relevant market structure. 1110 had been a massive DSR level. And obviously that previous structure support, once broken during yesterday's day session, became resistance. So the 1110 held the rally right here. Our closing ATR yesterday was 17.5. Add 3.4. That puts us at about 19. So today, now again, remember, it's a Friday. Yesterday was a massive day. So we would take our highs here at 1110, subtract that, and that would project 1090s. If the lows of the day are in 05, add to it 1124. Now the 1124 has relevance because it's right back into this previous structure resistance. So you see all of these swing highs coming in at 24.25. So if the market were to rally straight north today, our current lows are the lows of the day, 120% projection right at resistance, resistance, resistance. So if we popped here, we might buy some IWM puts, looking for a follow-through back down to a retest of the 1100s and then possibly new lows. But again, gang, couldn't be any more valid evidence of the importance of structure. So since I'm talking about that mini Russell, let's roll right into our Russell 1000 tick. This 1000 tick chart, TF 1214. Make sure that your DSR levels are on there. Set them to 4,000 for pulling in data from the 4,000 tick chart. Right there was the 1110 DSR support level. We had traded that with success. Again, once that DSR support level gives out, previous structure support, once broken, anticipated resistance, tested 1110, tested 1110. There's my turning point black tip sell. There's my RSI overbought. And now again, on any shorts from this area at 1110, anticipated move back down to 1100s. Those of you that bought the 1100s, we talked about 1106 first target, 1110 second. So if you traded a two lot, we talked about risking 300 to 500 per contract. So if you risked 1,000, you made 2,000. That's a 1-to-2 risk reward ratio. And we hit 1110 after we closed the room down at around 12:30 Central Time. Beautiful, beautiful trade. Power of structure, gang. Power of structure. But again, you got to have a rules base. So right now, mini Russell. Now, real quickly, if the 1110 doesn't hold and we break above, close above, then where are we headed? Same thing. So this swing low right here precedes the pop to this new structure high. This close right here closed above the previous close. So we'll use the last leg here to do our Fibonacci analysis, and that's a fib extension or projection. You'll note the 1618 Fibonacci extension of that leg projects to about 1114. The 618 retracement of that same leg is resting at 15.5. So we've got a 1.5 point window there, basically 14s to 15.5 for a potential target. Okay, we'll be looking to possibly buy IWM puts on a retest at the 1110, possible short entries in the mini Russell. All right, while we're here, let's go take a look. S&P 1214. Yeah, and again, a lot of you are writing those levels down. You are dropping those in on your chart. If you like swing trading, this will easily produce, 7 to 12 signals per week. Again, the risk is a little bit higher, but the reward is also higher. So risk-reward ratios can still be, for every unit that you risk, whether that unit is 18 ticks in crude oil, 22 ticks in the Russell for a day trade, or 30 to 50 ticks for a swing trade, the reward is going to be 1.5 to 3 times greater. S&P right here, we've seen a slight break below. This solid green tells me that on my 4,000 tick time frame, I still haven't closed below. Otherwise, this would have gone and looked exactly like this with the red interior. So right now, my 4,000 tick still holding the 58s. So if I'm long from 58s, my stops have to go below that support level, which again is only 2 points. Okay, initial target, we've got structure right here, right at the midpoint, which is this moving average. That moving average rolling completely sideways on that 1,000 tick. Yeah, so yesterday morning, remember, we popped right here, 7:30, had no well, it's a qualified trade, but not during our day trading session. Rolled all the way back over, and then right here is what we've got going on for the morning session so far. So S&P key levels, 58, stops below 56, targeting 67. If we rally back to 67, we'll look to buy some SPY puts. Yeah, but some significant levels gave way on the daily on the S&P. All right, let's go take a look at CL real quickly. Crude oil's open at 8 a.m. Yeah, I had one winner, one loser this morning in crude. Down a little bit on that. Look at the power of that DSR resistance right there at the 340s. Support down here. We did take out this level at 230. Went slightly lower right there, about 20 ticks. We've got a new DSR down here at the 92 handle. Remember, 92 was relevant for us on the way down. And then once that resistance was broken, we got a $2 pop, rallied as high as 94, and now we're kind of back into a sideways trade. So, gang, when you see this on your DSR levels, again, depending on your position size, I'm going to pull this level in. 93.30 is going to be a key level for me intraday. So I'm going to look for a DSR level intraday, or I'm going to look for an OZ1, OZ2 on my range trader. So again, we're back into the midpoint. Just like we saw this midpoint yesterday, back at that big Mo. So remember, we came down, we talked about this being a good support level. We also talked about that being a buy signal on the hourly chart. We popped up, we got our initial target, did not get to the extended target, so the balance would have been taken out there on the trail stops, still between $400 and $500 winner. Now we've popped back up. This was 727 this morning. We're back down. We've got the same basic visual pattern here, but I want you to note the difference over here, gang. We decline on black bars. We go oversold, lower high, bullish divergence. And then on the right side of my pattern, my turning point black tip fires. Love it. Boom. Up here, 11 o'clock, we go overbought, higher low, bearish divergence. Turning point black tip, and then I get a black tip on the right side for the sell. Love it. Right back down to the previous support level. So yesterday, we saw the 240s straight north to the 320, 330, almost $1, straight south. Beautiful directional move. Okay, so right here, we've got a double bottom forming right here. The difference is we don't have an extreme oversold condition on that RSI, and that's what I'm looking for. I want to see the extreme overbought or oversold condition on the left side when I'm looking at these tops and bottoms. So over here, did I get an extreme overbought on the left side? Yes. Extreme oversold on the left side? Yes. Extreme overbought on the left side here? Yes. Okay. Very, very key. Extreme overbought right here on the left side? Yes. Higher low. Retest to the high. We go higher right into the DSR level. Again, this morning at 7:30. Caution on crude oil because of volume right here, but that's a qualified signal. So again, look at that pattern. You can duplicate that RSI with basic structure in any charting package. Overbought, we go higher high right into previous structure and my DSR resistance, and yet I've got a lower reading on relative strength. Bearish divergence. Okay, so 330, 340 area of interest there. Dow traders. All right, so Dow Jones here. Again, beautiful symmetrical turn right there. We pull back. We get no qualified buy signal at the DSR support, 930s. We get no signal down here. Now we've got double bottoms that have formed, and we finally found some support, Dow 16870s. We've rolled back down. We're in bearish directional movement, Big Mo's black. Market itself is on new structure lows here. So area of interest here, 665 to 675 in the Dow. Yeah, let's take a quick look at gold. Okay, so we tested the turning point black tip. Again, gang, that's a very aggressive trade. It's early in the morning, but we can see nice support levels down here. So right side of this, nice buy signal yesterday morning. Buying that DSR level right there. Again, we're going to look at 3 to 4 points of risk on this trade, but from the 1209s, we go straight north to the other DSR level, 15 points, which is 1,500 per contract. Not much going on there. I've got the cluster trader rolling. Again, it's typically slightly down or break even on Fridays, but I've looked at it per hour on Fridays. So the first hour of the morning is not bad. Number two, we are, so the go trade right here, we got a slight gap higher in crude oil. Again, the November 2014 contract were December contracts on the other futures. Complete sideways trade here. So the NASDAQ, that's my 300 tick chart, and just a sideways slop fest. Major support down here against 4,000. We've got resistance against 4020. We're opening slightly higher here. So decent range. We'll see if we just range trade for the balance of the session. 4,000 to 4020. So a 20-point range. Again, overall momentum is bearish. We're gapping higher. So if price rallies up to this 18 to 4020 handle, then we can look for DST sell signals for a move back down to fill the gap right here at 05s. If we go fill the gap, then roll lower, aggressive buy signals can come in around 4,000. Yeah, and I'm still testing the S&P strategy up here top right. Yeah, it's looking good. I've got the cluster traded advanced on it, so we'll see some signals over here. Running that in the background in the sim account. Crude oil bottom right on the brick wicks, so we'll be able to see both. You see right now, gang, crude oil, let's expand the charts a little bit. Yeah, so OZ2, offer zone 2 in crude oil, 93.36. Recent swing highs here at 93.30. So I've got structure relevance at OZ2. We'll see if we get a break above, close above. Bid zone 2 down here at 92.20. Let's just take a quick look. Yeah, I moved it up to a 300 tick to get fewer bars. So yesterday we looked at this on the 100 and 50 tick, which is pretty common for the day trade. But in the afternoon session, gang, we made our move right back to the midpoint, produced a nice sell signal there again. And then we rolled all the way back over to the bid zone 2 and then retested these lows. So again, that 92.30 zone, pretty significant. Rallied right back up. You see this swing high was yesterday's afternoon high. It's just above the midpoint on the range trader, and that's near where our offer zone 2 comes in today. So 93.30 to 40, nice potential offer zone there for for crude oil. Yeah, crude's gapping higher. So we'll see if we roll back over. Remember, crude opens at 8 a.m. So we opened around 270s with our gap down here at 245s. Yeah, I don't know. It shouldn't have that big of an impact. Bill Gross moving to another firm. Some say the best bond trader of our time. We saw him all the time on CNBC for PIMCO. Starts a job with a new firm on Monday. Bill Gross leaving PIMCO for Janus. But again, gang, remember, 3 massive volatility days, 130% or more ATR each, with yesterday being the largest range day, high to low, and closing below some significant structure support areas. So it could just be a dead Friday. I imagine we'll get one little pop here for some directional movement. Okay, beautiful. Come on, seriously? Let's go take a look. Ooh. Right to our level, gang. Are you kidding me? You're telling me this Fibonacci stuff might have some relevance? 80.70 was our 127 Fibonacci projection. We drove right to it. Popped a little above by about 40 cents. What's that candlestick tell everybody? We gap higher, roll all the way back down, fill the gap, roll back up, close near the highs. Man, oh man. Hey, Rod, take a quick look here. I've got FXI showing a little bit of a buy signal here. It's a buy signal with trend. FXI, gang, China 25 Index Fund iShares. We've rolled over, and then here we're putting in a symmetrical double bottom, basically a 5-bar pattern. Structure holding right here. We gapped higher, and this was the last test of 39 bucks before we rolled to 42.5. So might look right there at a quickie there, a flyer maybe for mid next week, FXI. Now again, it's a weekend, so I don't know if we take a hit over the weekend on the options trade. But gang, FXI right there, $39, symmetrical double bottom at structure. Kind of a sideways trade. You see our 200 in the background right here going completely sideways. We've got an ascending 50 right here. And again, look left with structure. The thing's gap happy. Gaps all over the shop. But again, pretty low risk in the sense that I could play stops at 38.50, risk 70 cents, and a move right back here to this 50-period moving average produces what, almost $2, or I'm sorry, $1.40. Okay, the other thing, gang, here on the spider, GLD, which is the gold. Yesterday's bar, pretty significant candle right there. So let me tighten this up a little bit. We'll pull this guy back down. Now again, when we counter trend trade, obviously my momentum indicators will all be bearish, showing the sell signal. Counter trends, we're buying against that move. All right, so first of all, let's go look left on a weekly. I want to see if I can identify any structure relevance. This is what we've been doing for the last 2 weeks. And again, been patient. So we did get down here to this level, not quite to the 1550 handle. Okay, so we're $1.30 off of that 1550 that we were looking for. So we know that we have a descending wedge or a bear pennant forming. We've got descending higher or lower highs right here, and yet being held by structure support. Now we come back into our daily bar, and on the daily bar right here, this is a pretty significant candle pattern. We go oversold, lower high, bullish divergence, and then on the right side, we have not only an outside bar with a higher close, but we also have a complete bullish engulfing candle. So again, might take a look at some GLD calls. If I bought the stock right here, again, $16.93, it's relatively expensive. Stops have to go below the current swing low. If they do take these lows out, gang, let's say a 115.78 stop, they're probably going to go straight to this 15.5, which is kind of where we want to be long anyway. Okay, so you see a little bit of divergence right here. You see DM negative declining, DM positive rallying slightly, but again, it's more about a double bottom and the right side of that double bottom producing an outside higher close bullish engulfing candle, GLD. All right, gang, we just pulled back and filled the gap in the Russell. Range trader just generated a buy signal over here for me, or the cluster trader. So I'm going to go take a look right here. Stops have to be below 05s. Okay, so we rolled back over right here. We filled the gap, came into support. Then the cluster trader generates a buy signal. So I'm going to pull my target 1 down to 0890, so a retest of my resistance zone pays my scalping contract. And then again, I'm happy leaving this one up here. That second target's $480. If the market breaks above this structure resistance, we're likely to get that run. Remember, that 1110 handle is that big level that we've been watching. So a break above 1110, and we actually talked about this thing possibly then going to 1115 area. Yeah, and if you own the cluster trader and you don't trade Fridays, then obviously I'm just showing some repetitions. NASDAQ traders, real quickly here, since the 8:30 open, again, very small gap right here, but we are back into that 40-20 zone we talked about. So 40-20 NASDAQ DST signal, watch for those. Fade that back into 05s to 4,000 even. Go ahead, Rod. Okay, so again, gang, no options desk trade. Okay, he's just calling out some analysis based on that. But again, we need basically a $4 move, you know, a 4% move in order for that thing to make any money, right, Rod? Yeah, baby. Okay. Yeah, they just need a little chance to take a breath there, GoPro guys. All right, gang, Mini Russell rolling over here after filling the gap. NASDAQ traders, your resistance zone, again, overbought bearish divergence against that 40-20. Our highs went right to 1950. Crude oil slightly lower. Let's see if we get down. I've got a trade now below support in crude oil. So we'll pop this up. If we close below support right here, then we look for a move to BZ1, bid zone 1. Bid zone 1 showing confluence. It comes in right where yesterday's market closed. So that's the gap fill in crude oil. Yeah, so if we trade below support, do not attain BZ1, then I look for the move back to the midpoint right there, and we look for a qualified signal. So that'd be around the 280, 290 zone. If I sell 280s right here, my stops obviously have to go above these double top highs. And gang, real quickly, for those of you that do want to, I don't know, take a bite out of Baba, Baba's back down into structure support. So obviously we kind of tracked and followed the IPO. Since the IPO, you see a lot of support levels right here at this, what is that, 88.50 to 80. And then obviously finding resistance up here. So basically it's just rolling sideways. Let's go out to the 30-minute chart. Again, not a lot of historical data that we can draw from, but you can see right here, low level of the support levels about 88.50. That's where a lot of y'all came in on your IPO thought process. I think we had a 92.94 in there who was the actual winner. But yeah, basically finding its support right there at those levels. And that's where Rod was wanting to be long anyway. All right, crude oil rolling over. We'll see if we do get a buy signal, gang, in crude. Anything down into this bid zone where the gap fills, 245, we'll look at that. News event out. 9 a.m., I believe. We'll take a look shortly. Bill Gross exhibiting increasingly erratic behavior. That's what Rod said about me just last week. Hey, gang, real quickly, update here. We stayed long in the Russell. And again, I want to show you. Okay, so this thing moved against the position. From our long entry, it moved against us 1.7 ticks. So I'm sorry, 17 ticks. Okay, did not hit our stop, rallied up. There's target one hit for about 180 to 200. Now we're at this key price point, 1110 handle coming in on the Russell. Okay, now with the market up here, again, you'll note my fib dot. So this is the chart I'm using to manage the strategy. The system put me in automatically, placed my stops and targets. My fib dots right here are plotting at 0590. So I can now trail my stop at 590. I've got $90 at risk in the position. Okay, now my fib dots are up here at 640. I'll go to 640. I've got a little bit of risk. So I've got, let's just call it 180 in the bank with $40 at risk, and we'll see if we can get through this. There'll be buy stops resting above this level, which means that if we pop right here, we should see click, click, click as we roll. Okay, so 1110 right now. We'll see if they continue to defend that. Now stops coming in. I'll go to 730 on the stops, lock in a little profit of 50 cents. Now, here's an area where I'm extremely overbought as we pop into this resistance. So if I wanted to, I could go ahead and exit the strategy. I do not want to click the close button. That shuts the system off. I can pull down here and drop it in below, and it'll exit, filling my limit order. B, I can trail my stop aggressively right here, but I want to give it some room up here. I expect some volatility against that resistance. Again, if they go, it should make a good quick move. So I'm making the decision now to allow this room to run. I'll lock in 50 bucks right here if it does roll back over. And then again, I could get a counter trend sell, as over here on my strategy chart, you'll note I've got a turning point that just came in right here. And again, you can see we're in a sideways channel. So right there's my turning point. If I do get a black tip sell, then it'll put me short. We'll roll out of the long. I'll take profit on the second contract that we bought right here. And then we'll be in a net short position against that 1110 handle. NASDAQ back at the 19s. All right, so we just got the reversal signal right here. Now again, because I know the significance of this level, I'm going to put my stops just above this swing high. If we roll over here, we're going to roll, and we're going to roll nicely. Okay, so I'm going to go 660 for target 1. I'm going to trail my stops here to 1070 and 1080, reducing the exposure. Why is that? Because we did our pre-market analysis. We know the significance of this 1110 region. If they break above, close above, they're going to likely rally. But again, I like the sell against that structure resistance. I can come back here real quickly, take a look at this massive support zone down here. Remember yesterday we traded down. Let's just go take a quick look. We traded down here, our lows just at the 1120, at that big 1100 level. So based on that, the cluster trader just sold them near the highs of that channel. I'll take my extended target, and we'll move this extended target down to 1100. We'll go 110110. So basically, if they roll down and go retest yesterday's lows, then that produces about $700–800 for us on that second contract. Now again, I've got the strategy turned on to trade every turn. So what's more likely is if we did come back down here, we might get a buy signal. Yeah, and then if we break above, close above, you're exactly right. Then we're probably going to go run. Again, my projection was at 1115 handle. Crude oil right here, back into the midpoint. We traded below, closed below the support level, did not hit BZ1. So let's see if we get a qualified sell signal anywhere midpoint to the resistance zone. Gap still hasn't filled. Quickly here. You can see again the power of that symmetry. Double tops and double bottoms. This is a 39-minute chart. Yesterday we had a little bit of a rally. See the double top right there? There was our turning point. Look at the symmetry. Look at the double top. Number 2, we rolled over right here. We go double bottom. Bought more calls down here against those lows. We gap higher. Open right there around 8.5. And now we're already $1 higher on the day in Apple, trading 99.50. Yeah, that's a 30-minute chart. So we can come down, look at that, look at 15-minute, but just really focus on price action. Visual price patterns over and over and over. Again, I've been teaching it for a decade and a half. It just flat works. All right, gang, real quickly, here's the update in our cluster trader. Okay, we put the cluster trader put a short here. I rallied my target 1, so we hit target 1. So we were short 2, target 1 attained. If target 1 is hit, then put some money in the bank, cancel the existing stop, replace with a 1 lot, which the strategy does. Okay, so I'm going to go here. I'll go 11, 11, 10, give it room to pop up here, and then roll back over. Again, great risk-reward ratio. We put 150 in the bank. If the market pops and takes out our stop, we lose 120. So we still wind up covering commissions. But if this bad boy rolls back over and goes down and tests yesterday's lows, we've got a potential for an 850 trade on the second half. So that scalper basically covers the cost or pays for the opportunity to participate in that potential bigger move. All right, crude oil back into our midpoint right there. I've got a turning point. See this right here? So again, very, very simple, gang, if-then thought process. If we trade below, close below support, then ask the question, did it go to the BZ1 level? If yes, then no trade. If we didn't make it, then look for a rally back to the midpoint and a qualified sell signal. If this, then that. If this, then that. Yeah, well done. I've got some DST traders telling me they just continue to sell against that 950 handle in the mini Russell. Yeah, so that would be just the opposite of what we just looked at on UGAS, okay? We've been buying call options, or actually buying the stock against those lows. Rod, every time we test that support level, he buys stock. We rally back up, cover. Rolls back over, buy the scalping portion. So the same possibility available in the mini Russell. The difference there is we're sellers against that 1109.50 to 1110. Rolls over a little, take $1.50, take 200. Pops back up, put them back out. Rolls back over, take 100, 150. Again, it's either going to break above and go, or it's going to roll back over and we'll go see a retest of those lows. All right, gang, here we are, new structure high. So Russell traders, there we go. Okay, so basically that trade was around break even, right? We sold them, covered partial, left the other half in, and now there is our break above, close above. So we've taken out our 1110s, we've rallied to the 1112s. So we've got new structure highs in the Russell, and we got a tip of the hat. The hat tip says we might be going higher. So if we go to that OZ, very nice, gang, on those Apple calls. Okay, now real quickly, let's watch top middle. NASDAQ's broken above, closed above the 40-20 handle. We're at OZ1 up here, first test. Now again, I've got an extreme overbought condition at OZ1, so this is aggressive. We typically look for this exact same signal, but at OZ2. All right, so we'll see if we now get a momentum push. Still no qualified signal there in crude. As crude takes out, we're at 93s. So let's see if we rally now to the 314 handle in crude oil. And then right here, cluster trader just got me short in the Russell. We're approaching that OZ1. So again, this is a more aggressive signal here in the mini Russell. because we're basically out here in no man's land. So I'm going to take my limit order, pull it up. I'm going to exit partial there for about 2 ticks winner. Again, that basically covers the commission, and then I'll let the balance of the trade run. I'm going to pull this down to see if we retest the lows of the day at 560. That'll pay. So I've got a good risk-reward ratio. Again, the trade's more aggressive because we're kind of in no man's land, not quite to offer zone 1, and we just taken out that big 1110 level that we spoke about earlier. I do have it on trade every turn. That's right. Okay, NASDAQ from the 26 handle, we're pulling back. Now we've traded to the OZ1. We got a little bit of a trend underway here. Our big Mo is starting to point north. Okay, so now, gang, on this one, we've gone new structure high in the NASDAQ. Now let's look for the higher low. Where might the higher low exist? Previous structure, resistance. Again, if it's your third day in the market, you can look left right there and see the significance of this. We trade 40-20, rejection. 40-20, rejection. 40-20, rejection. 40-20, rejection. 40-20, boom, new structure highs. Okay, so any pullback into this area, let's look for a buy signal, and then a potential retest of the 26s, and then the extended target would be 40-35 right there at OZ2. And remember, that 35 was a big level yesterday on the way down. That's where we started buying our NASDAQ, or I mean our QQQ calls. All right, gang, I'm taking the balance off there on the cluster trader. So that trade winds up making about 100 to 120 net. Again, aggressive trade. Apple approaching 100. Let's take a quick look here for those of you that are in those calls. This is the 15-minute chart. We can go back in. Let's go grab our 39. Yeah, so plenty of room to run. So, gang, a retest of that 101 to 170, about a 30-cent channel right there. Nice pop. Traders, the NASDAQ, there's a great example of your double top now at OZ2, or I'm sorry, at OZ1, after that little rally. Okay, so look at the symmetry right there on that nice looking double top. 40-26 handle, OZ1 tested. Yeah, so now that we've rallied to this level, anything back here, we'd look for a long entry. Market's showing us new structure highs. Okay, gang, so half off on the QQQ calls from yesterday. All right, gang, nice rollover now here. Okay, so there's the mini Russell pulling back. Let's see if we get anything down here, midpoint go trade, likely to get a long entry here. So again, if I would have left the system run, then target 1 would have been attained right here. So I exited the strategy early. We'll see what our targets would have been here. Let's come here, here. Okay, so from the short entry, Boom, right there. So there's $340, so 34 ticks. So I've got my settings set up, so target 1 would have been hit right here, and then obviously trail stops come in. Still made profit on the trade, but again, exiting the trade. That's exactly right, yeah. So again, you can let it run purely like a level 3. I prefer to trade it this way. I typically outperform it month in and month out, but I wanted to show you that week in, week out, or even on a trade-by-trade basis. You see right here, I've got a turning point now setting up on the top left. So this could be a turning point black tip, basically a buy with trend after we've made new structure highs, higher closes, and we took out that 1110 handle. Yeah, so there's the buy signal right there. Okay, so the strategy got short at 11, 11, 12. So the target 1 would have been hit, and then the balance came off right here at 11.08. So about 320 on the second contract. Yeah, now we're back long, so we're looking for a retest of our current highs, and then potentially a move to that offer zone 2. So based on that, I'm going to move my targets here. I'm going to go up to 1480s, just below the previous projections that we ran. Yeah, and again, remember, I typically have it off on Fridays or maybe trade the first hour, so I'm just being a little bit more aggressive. Overall, for the last 4 weeks, the strategy's up slightly or down on Fridays. I'll have to look at it again, but typically it makes the majority of its money, 80% or better, Tuesday, Wednesday, Thursdays. Traders, another great example here of the symmetry. So I want you to note, look at this. Overbought, higher low, bearish divergence. Now again, where is price relative to? We don't have a big time structure level. We're not quite to offer zone 1. We haven't hit the 93.30, but start recognizing every single time the charts present a double top or double bottom for you. I want you to see those real time. And again, the first thing you do when you see that, again, think about the stop sign. Think about the natural progressions, the if-then thought process your mind goes through. Red octagon, 4 white letters, regardless of what you're doing, you see it, and it's an automated process that immediately follows. And then physiologically, your foot automatically moves to the brake. And automatically, you know exactly how much pressure to apply to bring the car to the stop. This is exactly the same thing you've got to do in your trading. Now again, I want you to recognize these patterns because they're incredibly powerful, and whether you're a client of ours or not, you can use this information because every charting package has an RSI, right? You can look left in any market on any time frame and recognize relevant market structure. So there's the double top. Now what I want you to do is say, okay, what do I see? I see the double top. Now, what does it mean? It means there could be a change in the direction of the market. The market has recently gone up, so a change in that direction would be potentially down. Okay? And then the final thing is, what do I do based on that meaning? Well, the first thing I do when I see a double top is I say, A, do I have an extreme overbought condition? Yes. B, on the retest on the right side, do I have bearish divergence? Yes. If I have those two things, then my mind automatically asks the question, where is price relative to? I look at my DSR levels, I look at my range trader, and I look for structure. That's it. That's it. And again, when you get out in the higher time frames, we've looked at this for 2 weeks now, you see the relevance of that structure, the DSR levels, and then we've done some work with fibs. But take all the other stuff out. Just look at double tops, double bottoms, extreme readings and relative strength, and then where's the market relative to? When those things come together, can produce really nice turning points, and those turning points obviously are opportunities to get long and get short. We just looked at it. Yeah, congratulations, DST traders. You just took the short right there at OZ2. And again, look at that rollover in the NASDAQ. Now again, if I'm waiting for the lower close on the candle, I'm short from 250. I want 5 or 6 points on my scalper right there at 1650. And then I'd still be short the balance. I can trail my stops just above the black dots. But there is overbought, higher low, bearish divergence at offer zone 1. What happened? Market rolled over. Yeah, beautiful trade on the NASDAQ. Yeah, so question, if this exact pattern took place up here against this 25 to 30 zone, the one that we looked at pre-market, so if this exact pattern was present and we were just 50 cents, or I'm sorry, 20 cents higher, yeah, I would have been shorting them up here. Yeah, but right now I just call this no man's land. You see that my significant levels are up here from my pre-market analysis. I already know that OZ2 is that level. Yeah, so if I just sell it right here without the help of potential structure or my range trader or whatever, it's less likely. Yeah, just a lower probability trade. All right, now NASDAQ traders, here's the potential long entry. Okay, so now again, let's walk through this, the if-then thought process. So we traded to OZ1. We talked about back to midpoint. Did the market pull back to the midpoint / Big Mo? Yes. At the time it did we see an extreme oversold condition, RSI? Yes. Did we get a turning point? Yes. Did we follow it by a black tip within 1 or 2 bars? Yes. Okay, so there's a buy signal now with trend. Again, it's a Friday, but we'd look for this to retest the current highs. So target 1 would be 25.5, and then the extended target would be 33.50s to 35s, right against that offer zone 2. Now we've just popped up right here, and we have our bull rotation with our colors going to white on the candles. Yeah, exactly. So if I'm a buyer here, stops have to go below these lows. Yeah, so I'm going to come back here. I'm going to buy retracement. We'll see if we pull back. Yeah, I'm not going to get filled on everything on those. I'll buy a retracement back into this swing low. I want to put my stop down here. Now, obviously, if it just takes off, I'm going to miss the trade. All right, crude oil. There's our first test of OZ1. 93.13. Little pullback right here for about 18 ticks. Yeah, you can definitely sell the first test of OZ1. Again, it is aggressive, but the historical testing is very, very simple to do. Yeah, so let's just pop it up right here. I don't do it. It's probably, my guess is 50% accurate. But again, when we modify the stops and targets, that obviously changes the outcome. So here, let's just roll left real quickly. So right here, first test of OZ1. I sell 203. We pull back to 187. So we would have gotten a 10-tick target for 100, a 12-tick target for $1.20, and then we took it off and made new structure highs. If I sold first test of OZ1, I would have been short from 29s. The lowest low was 22, so I did not get my target there. Okay, if I bought bid zone 1, my bid zone 1 down here, looking left, there's my first test at 118. We popped to 35. I got a 10-tick target, a 12 and a 15. Buy it again, 10, 12, 15, easily. Sell OZ1 right here. So I would have been short from O2s. We popped right here to 14. So if I had a 10-tick stop, I'm out on stop. If I had a 15, I stayed in the market, easily got my target 1. Look at that double top against that OZ1. So that's all I do when I go back in and do the back testing. Yeah, that's exactly correct. So right here, do I sell first test of OZ1? Sell 91.88. We pull back to 50. So again, that's a 38 tick retracement. I would have been flat on everything by the retest of this level right here. Sell it again on the retest. Now I have structure confirmation. We've already tested the OZ1. It held right there. Sell them again. Yeah, now obviously that's a couple of days in the market, so that doesn't mean the thing performs extremely well longer term. We want to test multiple occurrences. All right, gang, mini Russell, we're back into that resistance. I'm going to cover partial for $1.40. Still got my limit order out to buy the NASDAQ. So up money there on the Russell, and I'm going to pull my stops into 630s, just below the current swing low right there with number rounding. Now we'll see if we can go up, retest the current highs, and possibly rally to that OZ2 level. Offer zone 2. And you can see here that by waiting for the retracement rather than buying the first white candle, I just cost myself a winner. Yeah, and we'll talk more about that throughout the next couple of sessions next week and so on. But that's one way to enter, buy the color rotation. So if you bought it, you're long from around 18 or 17.5. So right there is your target 1. 22.50 would be your 5 points or $100. Now your opportunity to trail stops. Now again, I'm going to continue to trail it, looking to buy a retracement. Mini Russell up 280 on the balance. Let's see if we go test that OZ1. I'm going to start trailing my stops. I'm going to go 0740. Again, we'll look for a move to retest of that 1112 handle and then possibly 1114.50, 1115.5, somewhere in that zone. Okay, now here's the exact same setup that we just saw in the Russell. We just saw it in the NASDAQ. Now we're seeing it in crude. So we go new structure high, anticipated higher low. Did I have a buried RSI? Yes. Did I get a turning point? Yes. A black tip immediately follows? Yes. So A, I can buy it at market. That's aggressive. B, I can wait for a color rotation. In other words, the bar goes from black, bearish, to white, bullish. So you'll see right here, we pulled down, we went black tip, color rotation buy with a green big Mo, 273. We went straight to the OZ1. That's $350. Pull back to the big Mo. Let's see if we get a white candle, and then roll up to that 93.35 to 93.40 zone. So, gang, that's one signal, okay? It's the same rules that have to be met. We've just shown you now across 3 different markets. All right, I'm going to cancel my limit order entry. NASDAQ traders, stop should be now locking in 2 to 3 points there on your NASI on the trail. Back into that offer zone 1, highs of the session. I'm going to go, all right, gang, so right here real quickly. I just got a reversal trade. So, again, we took off the balance of that, and it's 9:30. I'm going to shut down the cluster trader for the session. You see over here I'm up $1.20. The strategy's up over 400 for the day right now. So I just closed it all out, shut the strategy down. And again, if I just let everything run per the system, 4 to 500, I exited early on 1. That's right. That's exactly right. Yeah, so strategy shut off. Now I'll turn it back on. That's all right. It's a Friday, so we'll just let it roll. Okay, NASDAQ traders just rolled back over here. Okay, so again, there was the SOS3 buy. Target 1 attained +5. Balance out here on the trail stop. Maybe a point out of that one to cover some commission. So $100 to $120 winner there. And now we're rolling over. We're going to possibly retest these lows. Let's see if we roll over and finally fill the gap and then possibly roll lower now.